All right, good afternoon, and thank you for joining us today for Unpacking the 2021 COBRA Subsidy and Unemployment Tax Updates. I'm Jackie Petroselli, the Marketing Specialist here at MP. For those of you joining us on a webinar for the first time, MP is a full-service human capital management services company offering a suite of products and services, including HR, payroll, benefits administration, time and attendance, and compliance. We support our clients with cutting-edge technical solutions, as well as proactive, reliable service and deep HR and payroll expertise. MP is wired for HR and helps clients succeed by tying their operations to their business goals. Today's presenter is MP's VP of Client and HR Services, Paul Carelis. Paul has over a decade of experience in the HR consulting space, working with businesses of all sizes and in all industries. Paul and his team of certified HR professionals at MP assist clients with compliance, training, and full circle HR guidance and support. And with that, I'm going to hand the mic off to Paul.
Great, thank you so much, Jackie. Good afternoon, everybody. Welcome to today's presentation. Before we kick things off, just a quick legal disclaimer. We're tackling these topics from a HR best practices standpoint. So please don't construe anything explained today as legal advice. Also, we'll be talking about some taxes, tax programs, tax subsidies. So if there's anything in question, it's always best to speak with your favorite tax professional. But in terms of what we will be talking about today, we're going to do a quick unemployment update. This is something that's kind of gotten into the news all of a sudden as states are starting to release finally their 2021 unemployment tax rates to employers, and seeing a lot of sticker shock there, understandably so. So we'll talk about that for a minute or two, and then we'll dive right into COBRA and the changes going on with the COBRA program. We'll do an overview of the Premium Assistance Program that was released as part of the American Rescue Plan Act. We'll talk about what you need to do as an employer. We've got several frequently asked questions. We've been fielding a ton of questions on this, so got a bunch of frequently asked questions that we will address here. And then as time allows, as we always do, we'll open things up for a live question and answer session. So certainly, if you do have questions, please do use the Q&A function within Zoom. So as I promised, a quick unemployment update. It's really important, probably this year more than any, especially if you're a multi-state employer and you have people working in different states and are subject to state unemployment insurance or SUI tax in multiple locales, that you're keeping those in order and keeping up to date. Unemployment tax computations are very complex. Even those of us who feel we have a moderate amount of knowledge regarding payroll taxes and things of that nature, coming up with how states arrive at final unemployment rates is often a confounding exercise. There's experience rates, there's factoring in how much you paid in tax versus how much was claimed in unemployment on your behalf. It can be a really mind-numbing experience. And as I said, there are several factors and several percentages that all kind of combine into this one big sausage-making event that ultimately spits out a rate that you have to pay for unemployment insurance tax. And you might see, certainly state governments and lobby groups and others, they've been working hard to come up with some sort of relief, because as you can imagine, I know we use the term unprecedented quite a bit during this pandemic, but the effect on unemployment systems has truly been unprecedented, and many states are going to take years to recover in terms of their unemployment funds from this pandemic. So there have been measures taken, there have been some successes. Certainly there have been press releases to accompany those where, for instance, here in Massachusetts, they were able to freeze the rate schedule. So that's basically the rate schedule are the minimum and maximum amounts, or the range that an unemployment rate can be for an employer, depending on obviously how much they pay in and how much has been paid out on their behalf on unemployment claims. So that was great. it capped the maximum unemployment rate that someone can have. It didn't freeze the ability for your rate to move. So what you were paying in 2020 can be very, very different, sometimes more than 100% different than the rate that you probably recently received for 2021. So while certain things were frozen, certain things were left to go. And so some initial reports, when we're looking at notices coming in from states or our files are being updated, we're seeing some, frankly, disturbing rises in unemployment tax rates for employers. And every state's program, it can be a little bit different, but for the most part, they were really delayed. So with automation and technology, a lot of states have been able to send these very quickly after the start of the new year under normal circumstances. This year was very different. So many employers in many states didn't receive unemployment rate notices until the last week or two. And the problem with that, if we're going by the rules currently in place, is that it's one thing for an unemployment rate to increase, but the problem is that, again, that's a 2021 calendar year rate increase. So you've been paying unemployment tax throughout the year, throughout first quarter, at the rate that was on file at the time. And what this increase often does is increase that rate retroactively. So you may have been paying at, say, 5%, paid a few $1,000s in unemployment tax on behalf of your employees, but all of a sudden you get a notice that your unemployment rate is jumping from 5% to 15%, and all of a sudden, you're owing, you paid in 5,000, now you owe another 10,000, and it's due by the end of the month. So again, each state is treating this differently. Here in Massachusetts, I was hoping to have some late breaking news.
I'm having trouble hearing.
But unfortunately, that has not been announced yet. I do know that the legislature here in Massachusetts is working hard to come up with some sort of relief that could potentially delay increases, reduce increases, might make them not retroactive and not active until later on in the year. We're hoping for an announcement really soon, certainly hopefully by the end of this week, because aside from HR services, as Jackie mentioned, we do a ton of work in payroll and human capital management. So if employers owe money by the end of this month, we need to start the collection process sooner rather than later. So we're waiting it out. We're waiting for news, hoping to have it by week's end. And then when we do, we'll certainly send out a notice to everybody on our mailing list. But again, if you're in other states, make sure you're keeping up to date with what those respective state unemployment departments and legislatures are doing to hopefully provide some level of relief to businesses. We've got a question here. What is the maximum UI rate for Massachusetts? I don't have it in front of me. I believe if they had allowed it to just go without freezing the schedule, it would have been 18% and change. I believe the freezing of the schedule put the maximum at 15% and change, and I don't know what the decimal is, but it's 15 point something. All right, so moving on from unemployment, let's talk about COBRA. So we touched on this a little bit. I think it was last week, and when we covered, or the week before rather, when we covered the American Rescue Plan, and did go into this COBRA with some level of detail. At that time, we were awaiting further guidance from the Department of Labor. They were scheduled to release model notices as well as some guidance by April 10th. And much to our surprise, they got it in time. I think they actually got it in a couple days early. So the good news is that we did receive the guidance that was promised from the Department of Labor. They did provide the model notices, so those are now in hand. Those are things that you can access through the Department of Labor's website, print out, modify, get out to the people that you need to. And there was also, as I said, a frequently asked questions section that was really geared mostly towards individuals and people that would be receiving COBRA coverage and receiving the subsidies rather than the business world for the most part. So there is still a need for some more guidance for businesses. So we're eagerly awaiting that. IRS has promised to release some guidance because there's a lot of tricky tax implications with this program. So we are awaiting further guidance, but we have gotten some. So as part of the American Rescue Plan Act, that same bill that provided the stimulus checks to individuals, the new COVID kind of sick leave program available to folks, putting some more money into PPP, so on and so forth. They also released this, what's called COBRA Premium Assistance. So this is going to be a program that's going to run through second quarter and third quarter. So it's going to run from April 1st through September 30th. What it's going to do, I guess, kind of similar to the program that ran back during the recession of the around 2008, 2010. It's going to provide 100% subsidized COBRA coverage for eligible individuals. It's important to note this applies to businesses who have to follow the federal COBRA laws, meaning they have 20 or more employees. This also applies to smaller businesses who offer a group health plan, meaning businesses who are under 20 employees and are subject to their respective state continuation, sometimes known as state mini COBRA laws. If you're a small business that doesn't offer a group health plan, there's no health plan to have to continue, so you don't have to worry about it. But otherwise, if you do have a group health plan, more than likely you're going to have to comply with this. For the federal COBRA participants, this coverage will apply to health, dental plans, vision plans, and HRAs. Does not apply to flexible spending accounts. And as I said, it does provide 100% subsidy to completely cover the cost of continuation. So zero out-of-pocket cost to individuals who are eligible. Quick question here. Does this affect a self-funded plan? Yes. So fully funded and self-funded plans are subject to this premium assistance. So to really be able to grasp the concepts and the program and understand how it's all going to work, I think it's important to first understand who's potentially eligible for these subsidies. So you'll hear it mentioned often. The term that the government is using and the Department of Labor is using to identify people eligible for this program are AEIs, or Assistance Eligible Individuals. So in order to be an AEI, let's go over the criteria. So these individuals either had a reduction in hours or an involuntary termination. And involuntary is important there when it comes to termination, meaning that they did not leave on their own accord, they were laid off, they were fired. There is an exception for gross misconduct. That's one area where, there have been some requests for some further guidance in terms of what's going to qualify for that. And gross misconduct would disqualify the individual and other people covered under their coverage. It's also must be someone whose COBRA maximum period, again, generally 18 months. Other situations can extend that for as much as 36 months, but whatever they were eligible for COBRA-wise cannot have expired as of April 1st. So if someone terminated a long time ago, say 2 years ago, they wouldn't be eligible for this, but if they've terminated within the last 18 months, there's a good chance that they could be eligible for subsidized COBRA continuation, and it's likely that you're going to need to comply and send them a notice. Also eligible are individuals who become eligible for COBRA during the subsidy period, so meaning someone that terminates today. It's not just for people terminated prior to April 1st, but includes really anyone involuntarily terminated or reducing hours between April 1st and the end of September. Also included as an AEI are individuals who had previously been on COBRA but dropped it. Really for any reason, we should at least explore their eligibility. And that includes people who were dropped for failure to pay. And the other category of AEI are individuals who didn't elect COBRA but are eligible and are still within their eligibility window. So in terms of the guidelines and responsibilities, this program creates a new 60-day election period. So once you identify who your AEIs are, especially if they're previously terminated or people who were affected and their COBRA effective date is prior to April 1st, they're going to get a brand new 60-day election period, 60 days from the date that you provide them with the notice. As I said before, this does not extend the maximum COBRA period. So let's say someone was terminated 15 months ago. They'll be eligible for 3 months of coverage, but it won't extend past that, even if it's still within the subsidy period. In terms of recovering the cost, and this is a key area where we need a little bit more IRS guidance, but it's going to be a tax credit against your Medicare tax liability on your payroll taxes. From what we've read and what we understand right now, this is similar to some of the other tax credit programs that we shared in previous webinars. This does appear to be a refundable tax credit. So if the amount of your COBRA expenses exceed your Medicare tax liability, then you should be able to get refunded by the IRS for that. If you or the third-party provider that you work with charges 102% for COBRA coverage, you are allowed to charge 102% and get credited for that. And that amount is also fully subsidized. In terms of language in the initial bill, it was suggested that there would be a way for employers to claim in advance for cash flow issues and things like that, be able to get cash advance from the IRS against that tax credit. We have not received formal guidance on how that's going to work just yet. Eagerly awaiting that. For companies that are under 20 employees and follow state continuation or mini COBRA, it appears that the individual insurance carriers will be kind of footing that bill and providing the subsidies rather than having to have the businesses pay for it out of pocket. One important note and guideline, and we'll talk about it in some of our questions and some of our scenarios, is that one thing that would disqualify someone from being able to get these subsidies is if they're eligible for coverage elsewhere. So if they've gotten a new job and their benefits eligible there, they can't all of a sudden hop on your COBRA and get subsidized insurance that way, as well as several other scenarios that we'll go over shortly. So further discussion about an employer's responsibilities under this new program, and it's important to make sure that you follow these rules. There's essentially 3 different required notices, and I'll show you kind of a snapshot of each of them momentarily. So first is a modified COBRA election notice for anyone who becomes COBRA eligible. So this would be anyone terminating from now through the end of September. And I'll show it to you, but basically it just mentions the program and the subsidies. But if you have an existing COBRA notice that you use now, if you're doing COBRA in-house that you send out to individuals when they terminate or otherwise lose coverage, you're going to want to start using the new one because it has important and required language in it. There's also a 60-day election notice to AEI. So this would be more for folks who received kind of the old-fashioned COBRA notice back whenever they were eligible for COBRA. So someone that may have terminated 6 months ago, 12 months ago, what have you, that received an original COBRA notice, they now need to receive a new one with the special language and to let them know that they now have a new 60-day window to jump on the plan at 0 cost to them if they are otherwise eligible. And then a notice with a date of COBRA subsidy expiration. So if and when that COBRA subsidy is going to expire and they're going to lose their eligibility for it, it is required between 15 and 45 days before that date that you send them a notice to let them know. One interesting thing and one thing that we've asked for clarification on is in the original kind of bill, it explained that notice of expiration was only going to be required if the subsidy was going to end for that individual before September 30th. We have that in here. But in terms of the language in the FAQs by the DOL, it doesn't say that. It just says you have to send it out prior to the expiration of the subsidy. So again, we're waiting for the guidance, but there's a chance that you're going to, and to play it safe, you may just want to send out a notice either at the beginning of September or sometime prior to that, just to confirm with them that the subsidy is going to end as of September 30th. Depending on their circumstances, they may be able to continue COBRA coverage at their own expense or obtain coverage through the marketplace. Another thing that this new COBRA program allows is the ability, if employers so choose, to allow AEIs to select alternative coverage. So if you have multiple plans, as long as it's not going to be a greater expense, a more expensive plan, the government doesn't want to subsidize that. But if there's a lower cost option and the employee wants to move to the lower cost option for whatever reason, and you want to allow that, you may. So here's a quick view at a few of the notices that the DOL has provided on their website. The first of which is a summary of the program. This can accompany any of the mailings that you provide to AEIs. It does a good job of kind of bullet pointing out some of the eligibility requirements in terms of requiring a qualifying event, that they must elect COBRA. You're not automatically going to put them on subsidized coverage if they're not on your COBRA now, that they can't be eligible for Medicare or other qualified coverage elsewhere. Just kind of goes over the rules. I think this is a nice form to accompany the election notice. So this is the first page of the model election notice that you're going to want to send out to folks who terminate anytime between now and the end of September. Very similar to the standard notice that we all know and love, except you see here kind of in this paragraph here, it talks a great deal about the subsidy program. It then goes on in further pages to discuss why you may or may not be eligible for the subsidy. It asks if you're eligible for Medicare or if you have coverage through another employer or a spouse or anything like that, to hopefully disqualify anyone who shouldn't be receiving the subsidy. This is what the new 60-day notice looks like. So this is specifically to be sent out to people who previously terminated, received a COBRA notice, but now need to receive a new one because they have a new 60-day clock that's going to start ticking to elect coverage. And then finally, we've got that model notice of expiration. So this is the one I was talking about most recently, where you'll be able to say that either you've reached the end of your maximum COBRA timeframe or you're reaching the end of your subsidy, also known as premium assistance. So in any of this documentation, if you see premium assistance, that essentially means the subsidy. Obviously, as you can see here, all of these will need some level of modification and customization based on the name of your business, the name of your business's group health plan, as well as any relevant dates and expenses. All right, so let's get into some of our most frequently asked questions on this topic. Okay, getting this one a lot. I'm small, I follow state mini COBRA. My state's mini COBRA program only continues health insurance. They don't include dental, vision, etc. Do I now have to extend these other coverages as part of the ARPA COBRA program? No. So aside from the premium assistance, the subsidies, this program, meaning the ARPA COBRA premium assistance, does not alter the rules of any state continuation program. So if your state only provides medical coverage through mini COBRA, then you don't have to start offering dental, vision, or any of those. I had an employee involuntarily terminate last year but only certain family members elected coverage. Do I have to send notices and offer coverage to the family members who originally declined? Yes, you do. So again, this is going to be a bit of a task for employers. There's no way around it. Hopefully you work with a good third-party provider who can help with this. But you really essentially need to take a look back at everyone who's terminated within the last 18 months or so and see what were the terms of their termination. Did they resign? Did they quit? Or were they involuntarily terminated? Do you have anyone in that time period who reduced their hours to non-benefits eligibility? And then beyond that, you have to look at each scenario and see who did or did not elect COBRA within that group health plan in terms of other members that may have been receiving coverage. Okay, here's a question from a potential AEI. I was terminated during the pandemic. I declined COBRA at the time and instead obtained individual coverage via the Federal Health Exchange or the marketplace. Does this coverage disqualify me from subsidy? So you probably remember hearing me talk about if someone has other coverage available to them that they cannot receive subsidized coverage. So what about someone who goes to healthcare.gov, Mass Health Connector, whatever state they're in, state health marketplace, and obtains individual coverage there? Does that disqualify them? Answer is no, it doesn't. So having an individual plan from a state or federal exchange does not count as disqualifying coverage for COBRA subsidy. One thing that can be tricky is that if there is an individual, especially where the notices did not come out or the guidance from the Department of Labor did not come out until after the start of this program, people may have already paid for April. So they're going to want to work with their respective state and state exchanges to see if there's any way to get a future credit or a refund if they're able to jump on the plan as of April. But those will be on a case-by-case basis. But otherwise, someone can drop marketplace coverage and if they're otherwise eligible and hop on subsidized COBRA. All right, follow-up question. Okay, I'm going to hop off the exchange coverage and do COBRA April 1st to September 30th. What happens on October 1st? Can I get back on the exchange? Yes. So the end of COBRA premium assistance or COBRA subsidies will count as what's called a special enrollment period or an SEP. So that will allow individuals to then go back to their state or federal healthcare marketplace and obtain coverage again because they've essentially lost coverage as the subsidy ends. I think we addressed this one, but just in case, how do I fund this if I'm a small business? And by this, we mean small, under 20 employees. It appears that businesses subject to mini COBRA will have insurance carriers fund the subsidies, which is great news. What are the potential ramifications if a former employee lies to obtain the subsidy? Good question. So if it's known that an employee has a new benefits eligible position, or if they are able to hop on their spouse's plan, they are technically disqualified from COBRA premium assistance. Current DOL guidance doesn't go into great detail about how they'll go after those folks or what the penalties will be. They just said that they may be subject to unspecified tax penalties. So we'll see if those get spelled out anytime in the near future. Question on the flip side, what are the potential penalties for businesses who don't comply with this? Most common violation would probably be not sending notices to the folks that you're required to. As you may or may not be surprised, they have gone out and spelled out potential penalties for this. So penalties for failing to comply and sending the required notices are going to be realized via what they're calling an excise tax. And it's going to be up to $100 per qualified individual, a maximum of $200 per family. So meaning if you're sending COBRA notices or not sending COBRA notices to a couple who was on the insurance, it would be $200. A family of 5 would also be $200. It's going to max out that way. If it's just the employee, then it'd be $100. but that's an excise tax of $100 per day or $200 per day. So you definitely want to make sure you get out your required notices. The deadline to get the 60-day election window notice out is May 31st. So you've got a little bit of time, but don't delay. Make sure you get your ducks in a row, get your record keeping in order, and get these notices out before May 31st to ensure that you're not subject to these excise taxes. All right. So for all the work I'm having to do with this, can I at least charge the AEI the 2% admin fee if we're covering 100% of their insurance? No, unfortunately, their out-of-pocket cost needs to be $0. But if they are charged 102% normally, you can claim a credit for the full 102%. Okay, so before we get into your questions, let's go over a few scenarios. So I recycled a few of these from the presentation 2 weeks ago, but I also threw some new ones in there based on some scenarios we ran by with clients, as well as some inspired by the most recent DOL guidance. So first, let's look at Mark Matthews. So Mark was laid off for pandemic-related reasons on October 1st of last year. He's picked up a part-time job, but is not eligible for benefits, does not work enough hours for benefits eligibility. Mark would be eligible. He'd be able to obtain subsidized coverage from April 1st through September 30th, and then can stay on COBRA at his own expense through the end of April next year. Jenny Jones was terminated on New Year's Day last year, 1/1/2020, prior to the pandemic. She was terminated for lackluster performance. Obviously, we weren't in a coronavirus scenario at that time, so there was no pandemic-related reason for her to be terminated. She is currently working, but not as an employee, not associated with the company anyway. She's an independent contractor doing deliveries for Instacart. She is also eligible for the subsidy from April through June. Her COBRA eligibility ends at that time, so the subsidy will end, her opportunity for coverage will end. She'll completely lose coverage at that time. Okay, then our friend, Fred Jackson. Fred resigned from the company on June 12th to start a new business. His new company is small and does not yet have a group health plan. Despite this, Fred is not eligible because his termination was voluntary. So it is important when it's a termination that it must be involuntary to qualify for the premium assistance. All right, let's look at Paloma Harvey. Paloma was terminated due to the pandemic shutdown on April 1st of last year. She's now employed at a local retail chain, full-time, eligible for benefits. Paloma is not eligible because she does have eligibility for a disqualifying plan elsewhere. Roy Ricardo is being laid off this upcoming August. He received a pink slip. The company is moving to a smaller facility and downsizing. So Rory will be eligible once he loses coverage in August through the end of September. That's when this COBRA Premium Assistance Program ends, and then he can jump on COBRA at his own expense following that, so starting October 1st. Next is Johnny Pearseed. So Johnny terminated, he was involuntarily terminated. We did fire him on May 30th. It was for punching a customer. He's been dealing with his anger management ever since and remains unemployed. Johnny would not be eligible because we're considering that termination gross misconduct. Important to note, his family members would also not be eligible due to that gross misconduct termination. Okay, now a few others. Randall Flagg was laid off February 1st of this year. Randall's spouse, Sarah, was on Randall's plan. She works somewhere where insurance is available through her employer. So provided that the insurance available through her employer is allows for spouses to be covered as well, Randall would not be eligible because he can jump on his spouse's plan. Lucy Simpson was just terminated a couple weeks ago. She is 70 years old. She would not be eligible because based on her age and based on the facts that we have here, at least, she's eligible for Medicare. So she does not receive COBRA subsidy. And then finally, Emily Anderson. Emily is an active employee still. She was working full-time and receiving benefits. She voluntarily reduced hours to part-time, let's just say to take care of her kids who are attending school on a hybrid basis. So I know we've talked about involuntary and voluntary terminations. Very interesting phrasing in the language. In terms of voluntary and involuntary, that only pertains to terminations, at least on the current guidance. If an employee voluntarily reduces their hours based on what we know now, yes, those folks would be COBRA subsidy eligible. So important distinction there that a reduction in hours, whether voluntary or involuntary based on current language and until it's corrected or altered, would be a premium assistance eligible scenario. Okay, so it does look like we have a little bit of time for some Q&A. Let's see if we've got anything that I'm able to answer here on the fly. If an employee is terminated in July 2020, enrolls in COBRA, but finds full-time employment with benefits in December of 2020, does the employer have to send any COBRA notification to the former employee? Great question. I guess unless you're absolutely certain that they're still on that plan, if there's a chance that they could have terminated or something could have happened and you don't know, I'd say the safest thing would be to send them that notification just in case, because it will ask them if they do have coverage elsewhere, if they're eligible for coverage elsewhere. So to play it safe, unless you intimately know this former employee and are 100% confident that they're covered with insurance, the safe thing would be to send the notice. Will the offer have to cover dependents as well as employees? Yeah, so if the employee was on a family plan or an employee plus spouse or an employee plus children level of coverage, you need to offer them continuation of whatever level of plan they were on before, and the subsidy would apply to 100% of that premium regardless of the level. Do we need to inform employees of this benefit? You do need to inform anyone who may be eligible for it, not necessarily, at least at this time, individuals who haven't had a qualifying event. Good one here. An ex-employee has paid her COBRA April premium. How do we go about getting her reimbursed and have a record of payment for us for relief purposes? Good question. In terms of the current guidance, it basically recommends working with the insurance carrier, working with the employee to either provide a credit for after September or providing a refund. But you'll just want to, as you said, notate it somewhere, make sure it's noted and filed away so that you can show that she was made whole and refunded for that amount in some way or credited in an adequate manner. Is there guidance on termination from FMLA, unable to return from leave? Are they an AEI? So in talking with some folks involved in employment law, they're really begging and pleading with the Department of Labor and or the IRS to help determine and get some clarity on who is really an AEI, especially when it comes to that determination of voluntary versus involuntary. That has not yet been released. But if an employee is on, I'm thinking this through, if they've exhausted their FMLA, they're still not able to work, and you're not extending them any extended leave, if you're terminating their employment, pending further guidance from the IRS or the Department of Labor on this, again, to play it safe. And that being said, you want to make sure that it is eligible so that you'll be reimbursed for the subsidized coverage. But if I was a guessing man, I would guess that that would be considered involuntary. I have voluntarily terminated past employees. Do I still need to update my forms or send notices knowing that they do not qualify? No. So if you know that someone voluntarily terminated and they weren't laid off, they're definitely not an AEI based on the grounds of their termination. You don't have to send them a notice now. If an employee is on disability and become COBRA eligible after 12 weeks, would that make them eligible for the subsidy? That's a great question. Again, that's something we're pleading with DOL for a little bit further guidance on. They're no longer an active employee at that point. They're an inactive employee, but they haven't necessarily been terminated. I suppose that may count into the reduction of hours. They're currently working 0 hours and lost their eligibility that way. So I'd say most likely yes, but again, I'm waiting a little bit more fine-tuned guidance there. Great one here. I had an employee laid off in March due to our store closing due to COVID. The employee was offered their job back in June, but declined and quit. Would this employee be an AEI? I would say no. I would definitely suggest and hope that we have that declining and the resignation in writing. I think that's something you're going to want to hang on to, because if there was a job offered to them and they declined it, basically you are reinstating them or recalling them, and they resigned, then they shouldn't be an AEI. Similarly, what if someone was laid off because of COVID, rehired, worked for a period, and then resigned from their position? Nope. So, last record in terms of chronologically was a voluntary term. So they resigned, they are not eligible. We've got some really great questions here. Thank you, everybody. As a small employer for the mini COBRA, should the carrier send the notice or the employer? So one notice that I didn't show when I was kind of showing a snapshot of the notices the DOL has provided, there is a specific model notice that speaks to mini COBRA or state continuation. So you'll want to look that one up if you are a small employer subject to this. That being said, just make sure you connect with your insurance carrier and make sure you're on the same page. My hope is that the insurance carriers will manage the notification process. They might need some help from you to know who terminated voluntarily or not, but you definitely want to reach out to them. Just make sure that one of you is sending out those notices. The last thing you want to do is kind of be left holding the bag with the carrier saying that they were expecting you to do it and you didn't, and you were expecting them to do it, and all of a sudden they're coming back at you for $100 per day excise tax. So, if history serves me and memory serves me, during the last subsidy program, which ran similarly to this, where small employers had the carriers providing the subsidized coverage, kind of the rules and how it was run did vary a little bit from carrier to carrier. So again, just reach out to them and make sure you have that straightened out. Okay. Sorry, I may have missed this. If an employee has a qualifying event but does not elect COBRA due to the cost, are they eligible for the subsidy? Their termination date was February 15th, 2021. Yes. So this is the prime example of a person who should receive the new 60-day election notice. So you've already sent them the standard COBRA information. Great, good job. Exactly what you needed to do. You now need to send them the 60-day election notice, which says, I know you declined coverage before. There is now the subsidy program available to you. Should you otherwise be eligible, you now have 60 days to decide if you want to hop on the COBRA at no cost to you until September 30th. Again, provided you're otherwise eligible, and it'll ask them those questions. How is reduction in hours defined? Basically, in terms of COBRA, reduction in hours is defined as someone whose hours are reduced to the extent that they lose their eligibility for your group health plan. So if you're, say, a large employer and you follow the ACA, and any employee who averages 30 or more hours per week is eligible for your insurance plan, and then they permanently change their status from a 35-hour-a-week employee to a 25-hour-a-week employee. They're no longer full-time. In most cases, depending on how your plan is structured, they would lose their eligibility to be on your group health plan because they made a permanent status change to essentially a part-time employee for benefit definitions. So that would be if someone's working 40 hours and reduces to 35, or let's say at your company, you allow people to be eligible for benefits if they work more than 20 hours, and someone goes from 40 to 25 hours a week, but they're still eligible for the plan, that would not count as a reduction in hours. It's really a reduction that causes them to lose eligibility and kind of be a COBRA scenario. What is the criteria for gross misconduct? Great question. That's another question being posed to the Department of Labor right now to kind of see where that line is drawn. I think workplace violence definitely qualifies, sexual harassment, things of that nature, probably theft. But in terms of, as you can imagine, if you've been running a business for some time, I'm sure you've handled plenty of gray area scenarios. This certainly can be some, as you can imagine, in a involuntary termination. So we're hoping to get a formal definition of that soon. Can an employee add more benefits through COBRA, dental and/or vision, if they currently only had medical? No. So really, the idea of COBRA, whether it's during this time or any time throughout recent history, that C in COBRA stands for continuation. So it's supposed to be a continuation of the insurance that they had while they were eligible. And definitely, as I said, the government doesn't necessarily want to pay more than they should or have to under this program. So they can't switch to a more expensive option in your benefits portfolio. They can't be adding coverages that they weren't participating in before. It's simply a continuation of what they had previously, or if you allow, if they want a less expensive option that you offer employees, then they can do that as well. Similarly, for a business that either had to terminate their entire group health plan, they no longer offer insurance, or went out of business and terminated the health plan, if there isn't a company-sponsored health plan to continue, then COBRA is a moot point. There's no plan for them to be on, so COBRA and COBRA premium assistance would not apply. If an employee is terminated on April 1st and becomes eligible for Medicare on May 1st, how is this handled? Do we automatically unenroll from our plan? Do we have to wait until we receive notification from their former employee that they have coverage with Medicare? What I would probably do, and as soon as possible, is send that expiration of subsidy to the employee, the former employee. And again, you need to get that in ASAP. I believe it's required at least 15 days out. So if you can't get it to them today, you might have to extend that a little bit past May 1st, but you essentially want to send them that expiration notice to say their eligibility for premium assistance is going to expire as of their date of Medicare eligibility, and take it from there, wait for a response. Can you go over how employers will be reimbursed for the subsidies, please? Yeah, so there is a little bit of guidance forthcoming from the IRS that's going to go over it in grand detail, but essentially, for those of you who have participated in the ERTC program or have used FFCRA for COVID sick leave or COVID extended emergency FMLA, it should run similarly to that. There should be a section on the quarterly 941 payroll tax filings where you'll be able to claim the credit based on your COBRA expenses for AEIs. Again, IRS is set to release some further guidance on that soon. For those of you who are MP clients and using iSolve, they are making some updates to iSolve and the business tax credit screens to allow for entry of these COBRA expenses that will be eligible for business tax credits. So we should have those really soon. An employee was terminated due to a reduction in workforce due to a merger, not COVID related. Will the employee be eligible for the subsidy? Yes. So in terms of a termination, it matters not what the actual reasoning was for, again, with the exception of gross misconduct, whether or not it was related to the pandemic. If they were terminated against their will involuntarily, laid off, fired because they were, just a substandard worker, their performance was not up to snuff, came in late, whatever it may be, they will be eligible for this, provided that their termination was not voluntary, that they didn't resign or quit. If an outside company handles all COBRA compliance matters, including sending notices, does the employer have any responsibility to send notices? Excellent question there. Again, similar to the question about small employers and insurance carriers handling it, I would just reach out to your third-party provider, make sure you know what their game plan is. They very well may need your input to help determine which employees were terminated voluntarily and which were terminated involuntarily. Again, while you may have an agreement with them that they're responsible for sending the notices, know that as the employer of record, you're responsible for compliance with this law. You would be the one responsible for penalties via excise taxes if you as the employer fail to provide those former employees with the required notices. So again, it's very possible. I know many third-party COBRA providers are doing a great job and will be sending these notices. And I think it's just paramount to you and really doing your fiduciary responsibility as a business to just make sure that whichever outside company you're working with, that they're on top of it and that they're going to help you be in compliance there. Let's see. We have a former employee who was paid through July 1st. I assume we need to refund the third party that pays for his COBRA. Yeah, so again, contact the third party. They'll be able to help work out any refunds due to that employee. From what date do I begin to look back in order to identify people I need to send 60-day notices to? I think, as a general rule of thumb, you want to look back 18 months, unless you know you have circumstances where people were eligible for a longer period of time, that had terminated and were for some reason eligible for 36 months or something like that. But in most cases, you want to look back 18 months. We had to terminate an employee based on a grievance. Not sure if it qualifies for gross misconduct. Who can I reach out to? I guess at this time, I'd probably reach out to the Department of Labor, see if they have a formal definition or are willing to give you an opinion based on the circumstances. An employee voluntarily elected to transfer part-time and lost benefits eligibility. Are they eligible for the subsidy? Based on what we know now, yes. If an employee voluntarily resigns because they say it's to care for a child due to loss of daycare and it's COVID related, are we required to send a notice? So I'm assuming they've exhausted their options under Family First coronavirus leave, or you're not participating in it, or they're not eligible for some reason. If they're voluntarily resigning, no, not necessarily, no. They wouldn't be eligible. What if an employee was fired before they were eligible for benefits? For example, fired within the first 60 days. So no, if they weren't eligible for benefits at the time of their termination, then again, there's no plan to continue there. They weren't on a plan and can't continue a plan. So if they weren't on your plan, so this goes for new employees or someone who wasn't on your insurance while they were with you for whatever reason, you don't need to worry about those folks. It's strictly people who are on benefits with you. All right, so I believe that is all the questions that we have time for now. Again, thank you. These were really fantastic. I hope you all learned something from the Q&A or from the presentation itself. But with that, I will hand things back over to Jackie. Thank you so much, guys.
Awesome. Thanks so much, Paul. We want to thank all of you again for attending this webinar. We hope that you came away with some helpful information. If you have any questions, please send them to marketing@mp-hr.com. We hope that you stay healthy and have a great day, and we'll see you next week.